How credit cards quietly rewire your brain about money. Behavioral finance in everyday life. The invisible friction. You're at the grocery store. You've got the organic almond butter, the steak that was on sale, and maybe a bottle of wine because, hey, it's Tuesday. You get to the checkout. The total hits $114.82. You reach into your wallet, pull out that sleek, heavy metal credit card, tap it, and beep, done. You walk to your car feeling fine, maybe even a little bit powerful because of that 2% cash back you just earned. But here's the thing. If you had to reach into your pocket, pull out a $100 bill, a 10 and 4 ones, and then physically hand them over, watching that cash leave your palm and enter someone else's drawer, you would have felt a literal, physical pang in your chest. You might have even put the wine back. But with the card, you felt nothing. And that nothing is exactly what the banks are betting on. My name is Prime, and I spend way too much time thinking about how your brain is being hacked by billion-dollar financial institutions. If you're someone who feels like you're doing everything right, you've got a decent job, you're playing the rewards game, but your savings account still looks like a desert, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. The $150 billion blind spot. Look, we need to start by challenging the biggest lie in personal finance. I use credit cards for the points. Now, you might be thinking, Prime, I pay my balance in full every month. I'm winning. I'm getting free flights to Hawaii. I hear you, but here is what most people don't realize. You aren't just paying with your money, you're paying with your behavior. There's a concept in behavioral economics called payment coupling. In simple terms, it's the psychological link between the pleasure of buying something and the pain of paying for it. When you use cash, the coupling is tight. The pleasure and the pain happen at the exact same time. But a credit card? It decodes that connection. It creates a time buffer between the gratification and the consequence. This isn't just a theory. Researchers at MIT did a famous study where they had people bid on tickets to a sold-out Celtics game. Half the group was told they had to pay cash, the other half had to use a credit card. The cash group, their average bid was $28. The credit card group, their average bid was $60. That is a 114% increase in the willingness to spend just by changing the plastic in your hand. The banks know this. They aren't in the business of lending money, they are in the business of reducing your pain of paying. The math of the small leak. Let's look at the math because the numbers don't have emotions, even if your brain does. Let's say you're the responsible user. You spend $3,000 a month on your card. You get 2% cash back, that's $60 a month back in your pocket. You feel like a genius, $720 a year in free money. But remember that MIT study? Even if the credit card premium, the extra amount you spend because of the lack of friction, is only 15%, far lower than the MIT 114%, let's see what happens. If you weren't using that card, you would have likely spent $2,608 instead of $3,000. Extra spent due to frictionless behavior, $392 a month. Rewards earned, $60 a month. Net loss, $332 a month. Over a year, you spent $3,984 extra to earn $720. You didn't get a free flight to Hawaii. You bought a $4,000 ticket for a $700 seat and let the bank convince you it was a bargain. This is where it gets really interesting. That $332 a month you're overspending, if you took that and put it into a low-cost index fund averaging 8% over 30 years, A equals P times 1 plus R to the N minus 1 over R. That free credit card rewards program just cost you $498,000 in retirement wealth, $500,000 for some airline miles and a metal card that makes a cool clink sound on the bar top. Does that still feel like winning to you? The dopamine loop, how your brain rewires. We have to talk about what's happening inside your skull. Every time you buy something, your brain releases dopamine, the reward chemical. When you use cash, there's a counter signal. The insula, the part of your brain associated with physical pain, actually fires up. It's a literal ouch. But credit cards act like a local anesthetic for your wallet. They numb the insula. When you remove the pain, all you're left with is the dopamine hit of the purchase. Over time, you are literally rewiring your neural pathways. You are training your brain to associate spending with zero consequence. You're building habit of consumption without friction. Think of it like a GPS. If you always use Google Maps, you never actually learn the roads. If you always use a credit card, you never actually learn the value of a dollar. You become financially lost the moment the screen turns off. And then there's the minimum payment trap. This is the ultimate psychological warfare. The anchoring effect. Here's a trick the banks use that is so subtle it should be illegal. It's called anchoring. When you get your statement, what's the first number you see in big, bold text? It's not your total balance, it's the minimum payment due. Let's say you have a $5,000 balance. Your brain sees $5,000 and panics. But then it sees minimum payment $125. Suddenly, the $5,000 doesn't feel so big. The $125 becomes the anchor for your decision-making. Your brain says, oh, I can afford $125. I'm doing great. You feel a sense of relief. That relief is a lie. At a standard 22% APR, if you only pay that $125, 1, it will take you 273 months to pay it off. That's 22 years. 2, you will pay $7,921 in interest. You bought $5,000 worth of stuff that is probably in a landfill by now, and you paid nearly $13,000 for the privilege. The bank didn't provide a service. They bought a piece of your future labor at a massive discount. The safety fallacy. Now I know what you're thinking, but Prime, what about my credit score? What about fraud protection? It's unsafe to carry cash. Look, I'm not telling you to bury gold bars in your backyard and live like a hermit. I'm telling you to recognize that the system is designed to make you overconsume. Credit scores have become the adult participation trophy. We spend so much time obsessing over a 3-digit number owned by private corporations, FICO, that we forget the only number that actually matters, your net worth. A high credit score just tells the world you're good at borrowing money and paying interest. It doesn't tell the world you're wealthy. I know people with 800 credit scores and $0 in the bank. I also know millionaires who haven't had a credit score in a decade because they simply own their lives. And fraud protection? Most modern debit cards have the exact same Visa, MasterCard zero liability protections. The safety argument is a smokescreen for the convenience trap. Actionable steps. Taking back your brain. So, what do? Do we go home and have a bonfire with our titanium cards? Maybe, but let's start with something more tactical. We need to reintroduce friction. Number 1, the 48-hour rule. If you're buying something online where the friction is the lowest, you must leave it in the cart for 48 hours, no exceptions. This allows the dopamine spike to subside in your prefrontal cortex, the logical part of your brain, to take back the wheel. Number 2, the cash-only category. Pick one category where you struggle. For most of you, it's dining out or miscellaneous Target runs. For the next 30 days, you only use physical cash for that category. I promise you, when you see those 20s leaving your hand, your behavior will change instantly. You won't need a budget app to tell you to stop spending. Your brain will do it for you. Number 3, change your statement view. Log into your portal today and change your settings to show the statement balance as the primary number, not the minimum payment. De-anchor yourself from their trap. The final revelation. Here is the most sobering thought I can leave you with. The credit card industry makes roughly $150 billion a year in interest and fees. That is $150 billion of wealth transferred from the pockets of hard-working people, like you, into the pockets of shareholders. They use that money to hire the best psychologists in the world to figure out how to make you click buy one more time. They study your eye movements. They study the color of the pay button. You are in a lopsided fight. The only way to win is to stop playing their game by their rules. Stop valuing points over peace. Stop valuing convenience over capital. Real wealth isn't built on a 2% kickback. It's built on the intentionality of every dollar that flows through your hands.
If you actually want to start building that wealth and get out of the frictionless spending trap, I've put together a guide on how to restructure your banking flow to automate your savings before the spending brain can even get a hold of it. You can find that in the description below. Go out there, put some friction back in your life, and take control of your future. I'll see you in the next one.